Welcome back to the weekly Bitcoin.com news show. My name is Corbin Fraser. Today is Friday, August 14th, 2020, and I've got a whole bunch of Bitcoin news for you today, including BTC and ETH fees are taking off. Goldman Sachs is possibly creating a cryptocurrency. New York regulators approved 10 cryptocurrencies for listing and custody. Indian bank accounts frozen for trading cryptocurrency. Nasdaq-listed Microstrategy Inc. moves $250 million into Bitcoin. And Bitcoin.com wallet reveals USDT Tether support. So all the way to the top, we've got this exciting story about BTC and ETH fees taking off. We are seeing some monstrous fees go up over on those two chains. So the cost of sending transactions on both networks has been rising sharply, coinciding with an increasing cryptocurrency prices. What are these transaction fees? You might be wondering. So there's two ways that cryptocurrency miners generate revenue. One is through what is called the block reward system, where the miner receives cryptocurrency as a reward for mining the block that contains the transactions. And two, each transaction also has a small fee which is paid to the miner to ensure that that transaction gets included into the block. So with both Bitcoin and Ethereum, there's a limit to how many transactions can be processed with each block. This limit has created a fee market where users need to compete to have their transactions prioritized to be included if the block is full. So according to data from BitInfo charts, BTC transaction fees went as high as $6.47 and Ethereum as high as $1.94 just this week. Now historically, we've actually seen some prices over on the BTC network skyrocket. You might recall, or if you check out any of the old charts, leading back into 2017, we saw BTC fees rise to over $50 per transaction. Now, this is a really difficult pill to swallow when you're trying to use BTC, for anything beyond trading. This is why there's several other different blockchains that have emerged, which are aiming to become the low-fee version of cryptocurrency and the whole original vision of being able to have these low-fee transactions. Most popular being Bitcoin Cash, which Bitcoin.com supports in our wallets. But there's several other blockchains out there that are really targeting the low fee movement of money. And I think we'll be seeing a lot more adoption of probably those different coins as we continue to see these fees rise. I think it's only natural for people to want to try out lower fee options, especially if you're trying to move some money and you're paying anywhere from $6 to $50 per transaction, depending on the activity on the network. Can be a little bit daunting for ordinary users or new users coming into the space, especially if they've been told, that Bitcoin and cryptocurrency is going to revolutionize finance, and they're also being told fees are through the roof right now. It's kind of a weird sales proposition. So yeah, lots of different cryptocurrencies out there, and of course, there's some that are striving to become lower fee versions of Bitcoin. Next up on the list, we've got Goldman Sachs possibly creating a cryptocurrency. So the company recently appointed a new head of digital assets, Matthew McDermott, and indicated a possible collaboration with the likes of JP Morgan along with Facebook. JP Morgan has the JPM coin, and Facebook has proposed the Libra project. And McDermott recently revealed that Goldman is exploring the creation of their own fiat digital token. The new digital assets head said it is crucial to build consensus with other banks, institutional investors, and regulators. He also stated that in the next 5 to 10 years, you could see a financial system where all the assets and liabilities are native to the blockchain. So kind of exciting stuff. Always fun to see, traditional finance looking at blockchain. Whether or not they need to create a new token for their project is kind of remains to be seen. But that seems to be the new flavor of the week. Mint your own coin. Of course, if you are interested in minting your own coin, you can head over to mint.bitcoin.com. We provide the simplest minting experience for Bitcoin Cash tokens, which allow you to send tokens for less than a penny, and it's probably the cheapest token platform in all of cryptocurrency. So go check that out if you have a chance. Next up, we've got New York regulators approved 10 cryptocurrencies for listing and custody. The New York State Department of Financial Services and the regulator of the contentious BIT license has published a green list with 10 cryptocurrencies for custody and 8 cryptocurrencies for listing. The 10 cryptocurrencies are Bitcoin, Bitcoin Cash, Ethereum Classic, Ethereum, Binance USD, Gemini Dollar, Litecoin, Pax Gold, Paxos Standard, along with Ripple. These same cryptocurrencies are pre-approved for exchange listing, except for Ethereum Classic and Ripple. The BIT license was first proposed in July 2014, and in the cryptocurrency world, where things move at an extraordinary rate, we've seen that the state of New York get left behind due to an inability to keep up. This has led to many cryptocurrency companies abandoning operations in the state, but hopefully we will see a reversal of that trend sometime soon. So I've been in the space long enough to see these different companies start up in New York and quickly just fade away or completely have to move up, pick up and move out of the state to continue business elsewhere. At the moment, New York is probably the most regulated state and really district in all of the world with regards to cryptocurrency. They're really keeping a very, very tight leash on it to the point where it's really hindering any development in the state for any cryptocurrency companies. So this is why we're seeing a lot of people move out of state. Lots of other states have, welcomed the crypto enthusiasts, including Wyoming, which is a really popular state with the blockchain crowd. Lots of different projects are starting out there due to their more open and welcoming requirements for cryptocurrency companies. Next up, we've got the Indian bank accounts frozen for trading cryptocurrency. India's largest mobile commerce platform, Paytm, which also provides financial services, has reportedly been freezing bank accounts of users suspected of cryptocurrency trading. So this is happening even though cryptocurrency is legal in India. The Reserve Bank of India, RBI, had prohibited banks from providing services to exchanges. Now, this ban has since been lifted, but several banks reportedly still refuse to work with crypto businesses. Local Indian news outlet CoinCrunch reported on these users being frozen out of their accounts, saying, "Crypto trading is not illegal. Banks are not restricted. However, banks can act in their own interest, so users are advised to take caution." Another reason why you don't want a third party controlling your money. So I think ultimately this is something that people in India and people all over the world are going to have to deal with. At the end of the day, banks are going to choose whether or not they feel that that cryptocurrency users and cryptocurrency traders are a threat to their system or not the type of customer that they want. We've seen this as well in Canada, where people are told after purchasing some Bitcoin that they're not allowed to do that. This is kind of why I think a lot of people are so interested in Bitcoin, is the whole idea that this is kind of shaking up this traditional finance system, which often does lead to a lot of pain points for people. There's nothing more infuriating than having your bank tell you that you cannot buy a certain thing, or that you cannot use a certain thing, or that you cannot use your money the way you want to use your money. So I think what we'll be seeing is a lot of users and a lot of banking people in the banking ecosystem just moving banks more often, just to find banks that are a little bit more friendly to cryptocurrency use. So yeah, interesting stuff. Follow along a little bit more about all of this drama with the banking infrastructure over at news.bitcoin.com. We'll always be updating some new and latest news regarding any of the issues different countries and different regions are having with their banks, especially as Bitcoin and cryptocurrency is adopted more and more throughout the world. So Nasdaq-listed Microstrategy Inc. moves $250 million into Bitcoin. The organization is apparently bullish on Bitcoin, saying that it's a dependable store of value and superior to cash. The billion-dollar company has purchased $250 million worth, adopting the cryptocurrency as its primary reserve. CEO Michael Saylor commented, "Our investment in Bitcoin is part of our new capital allocation strategy, which seeks to maximize long-term value for our shareholders. News such as this is always reaffirming to cryptocurrency enthusiasts, as it further recognizes the assets and often holds properties superior to cash, such as being fixed in supply." Interestingly enough, this whole announcement had the Bitcoin community in a large frenzy. I think a lot of people were excited about it. Interestingly enough, I believe the price of this company's stocks also did go up as a result of this announcement, which did lead many people to wonder, will other companies follow suit in creating a bit of a Bitcoin reserve in their as a primary reserve, which is kind of an interesting idea. Needless to say, I think it's exciting when you see companies and big businesses like this see Bitcoin as a superior form of savings than traditional finance and I guess the government issued fiat currency. So next up, we've got the Bitcoin.com wallet reveals USDT Tether support. So during the first week of July, Bitcoin.com's wallet added a number of new features, including a portfolio breakdown along with honest coin USDH swapping abilities. In the latest update, Bitcoin.com wallet users can now store SLP-based stablecoin Tether with the ticker USDT as well. Tether is the most popular stablecoin in the crypto ecosystem, and Bitcoin.com wallet users are able to store, send, and receive, as well as swap from any cryptocurrency supported in the wallet to USDT with the Bitcoin.com wallet. You can get started for free by downloading it at wallet.bitcoin.com or visit bitcoin.com and read all about all of the latest features and services offered by our company here. And of course, don't forget to subscribe, like, and comment below. And that moves me on to reading some comments. Actually, just one this week. We've got one from James McCool. Hello, James. James says, so China has about 60% of the current Bitcoin mining capacity. What would happen to Bitcoin if that stopped? Would it still function correctly? I'm just curious to know. So, James, we had a reply from Truth Monster, which just says the difficulty adjusts, and he's correct. Truth Monster is telling the truth. With BTC, the difficulty adjusts every 2016 blocks, I believe. And yeah, in essence, if a lot of hash rate leaves, then things just become easier to mine. And if a lot of hash rate comes onto the network, then things become more difficult to mine, which creates a little bit more competition. And I think the interesting thing is that, if you look at Bitcoin or you look at Bitcoin Cash has this new difficulty adjustment algorithm, which, there's been, just recently they've announced this new one called ACERT, which has been approved by all different parties involved in Bitcoin Cash protocol development. And yeah, with Bitcoin Cash, their difficulty adjustment is considerably shorter. So this allows them to more quickly adapt and adjust. Whereas BTC, their difficulty adjustment is 2016 blocks, which on average, depending on hash rate, is about, I could be wrong here, but I believe it's about 2 weeks. So if things change drastically, perhaps due to like a flood in China, then yeah, there's a chance that Bitcoin could become, if you have all this hash rate on there, and all of a sudden there's a big flood and all this hash rate pulls off of BTC, there's a chance that it'll be too difficult to mine and that, blocks potentially could take longer than 10 minutes. Typically those gaps in hash rate are usually filled by additional companies moving hash rate off of other SHA-256 coins, where they just move it back onto BTC for a little bit to try to keep things going there. But yeah, miners are kind of incentivized to just mine whatever's most profitable for them, so it's kind of an easy thing for them. But I hope that answers your question. If you have any other questions or want to leave a comment, leave one below. We'd love to answer it. And please subscribe. We'd love to hear from you and have you as a new subscriber on the Bitcoin.com news show. My name is Corbin Fraser. It's been an honor presenting to you the latest news, and we will see you again next week. Bye-bye.